wabarakatuh. Hi everyone, welcome back to my video. As usual, I will introduce myself. My name is Indang Sartika. I'm a student at Mercubuana University, especially in major in accounting. I made this video to complete the 10th forum of English for Accounting class. And in this video, I will explain about 1. The purpose of central banks' foreign reserve. 2. Overview of IFRS 9. 3. Empirical result of IFRS 9 implementation project. And 4. Conclusion. Okay, let's get started. Okay, we start from 1. The purpose of central banks' foreign reserve. Central banks are public policy agencies designed to maintain monetary and financial stability, set the regulatory standards for the financial system, establish financial infrastructure, provide other public good function, and monetary policy operation. Asia 2009. The purpose of central banks' foreign reserve are as follows: supporting and maintaining confidence in the policy for monetary and exchange rate management, including the capacity to intervene in support of the national or union currency. 2. Limiting external vulnerability by maintaining foreign currency liquidity to absorb shock during times of crisis or when access to borrowing is curtailed, and in doing so, provide a level of confidence to markets that a country can meet its current and future external obligation, demonstrate the backing of domestic currency by external asset, assist the government in meeting its foreign exchange need and external debt obligation, and maintain a reserve for national disaster or emergencies. 2. Overview of IFRS 9. IFRS 9 is an accounting standard published by the International Accounting Standard Boards, covering the measurement of financial instrument, asset impairment, and hedge accounting. The final IFRS 9 was issued on July 24, 2014, completing the 3 phases that the IASB embarked on to replace IAS 39. The new standard introduced the concept of expected credit loss accounting, requiring banks to predict the future loss of all assets and the point of origination or purchase, and set aside provision for this asset. Under the previous regime, ISA 39, banks provisioned for asset only at the point of impairment. 3. Empirical result of IFRS 9 implementation project. IFRS 9 applies one classification approach for all types of financial assets based on 2 criteria. 1. The business model for managing the financial asset to the contractual cash flow characteristic of the financial asset. When assessing the two criteria for determining how financial assets are classified and measured, the IASB clarified in BC 4.14 that it is more efficient for entity to consider the business model first, followed by the contractual cash flow characteristic of financial asset. Consequently, the discussion below follow the sequence in IFRS 9, starting with both aspects of the classification and measurement approach, business model followed by contractual cash flow characteristic consideration, and the ECL impairment approach. As previously indicated, hedge accounting it offset the scope of this paper. Last conclusion. IFRS 9 impact assessment should start early with the collaboration of accounting and foreign reserves management department. Work on assessing current foreign reserve asset classification under IFRS 9 and any associated transition adjustment should rank high on every central bank's agenda of priorities. Internal business documentation will need to be aligned to IFRS 9 requirements to business model and contractual cash flow characteristic requirement. Okay, thank you for your attention and see you in my next video.